Are you confident July and August will show the same?
I think there's some positive momentum in that regard, and I'll speak to that. We actually wrote about that this morning, so I have some insights to share with you. But let me say something listening to your roll up to this spot. Yes, I understand that the Federal Reserve and the path of the forecast is important, and for that matter, how the White House takes all of this in. But at the beginning and at the end of the day, the key people we're thinking about when we get a report like this, where prices actually came down a touch in June, and where prices fell for gas, for appliances, for electricity, for new and used cars, we're thinking about American consumers. We're thinking about people sitting around a kitchen table just like the one Joe Biden grew up at, where these issues about family budgets are absolutely critical. Groceries. Grocery prices have been flat or falling since the beginning of the year. So we keep in mind who our main constituency here is, and that's the American people. Households that are still dealing with prices that are too high, but as you suggested, moving in the right direction and with some real momentum.
At what point can you say that you've got this problem licked, Mr. Chairman? You've got a great piece of news here. Is the answer, as Kailey referenced, 3 months makes a trend?
I think one of the key trends here that we haven't talked about that's obviously very closely related to this, and it gets to your question, Joe, is what's happening with real pay, with the paycheck, with the buying power of pay. Now, we know that in June, the pay for middle and low wage workers in real terms went up 1%. But guess what? That is month 16 consecutive months wherein year over year real wages for middle wage workers have gone up. That's the kind of trend that gives people more buying power, a little bit more breathing room, and as I said, not just lower inflation, but actual price declines in some key budget areas, including gas, which was a pretty big negative in this report.
Well, that's absolutely true. You saw that downward pressure in energy costs, but we know there's still a hot war in the Middle East. Jared, we were speaking with your colleague at the White House, Amos Hochstein, earlier this afternoon, on Bloomberg about whether or not we could still potentially see risk of prices spiking once again. Is that the area in which you think we are most at risk of seeing a reinflationary spike, or is it elsewhere?
Well, obviously food and energy are taken out of the core because they're so volatile. I think it's really notable the fact that the gas price has been low and stable at a time when there's been the conflict that you talked to Amos about earlier. That really says something, and part of that is because the U.S. is such an important producer of energy, actually both traditional sources and renewables. Really big progress in both of those. But when it comes to the core, we break that down into three parts: housing, core services, ex-housing, and core goods. Now, core goods have been decelerating for a while. There's been deflation there, and there was again in June. We've seen that in a bit of a pattern. Housing, as you mentioned, though, that's been kind of a waiting for Godot story, and we think that some of those lags may have finally played out a bit. And 1 month doesn't a new trend make. But we do see some evidence that the expectation that declining rental inflation would finally work its way into the CPI. That did happen in June. We'll have to see if that persists.
Jared, I want to ask you about an exchange that took place. I know we're not going to talk about the Fed, and I'm not going to pull you into Fed policy, but when Jay Powell was testifying this week on Capitol Hill, it was the second day, or the first day rather, the second day in the House. Congressman Mike Lawler asked the chair about his interactions with President Biden. You might have seen this during testimony. Let's listen.
The last public meeting between you and President Biden occurred on May 31st, 2022. Does that sound accurate?
I'm going to take your word for it.
Okay. Have you had any private meetings with the president since that time?
No.
Any phone calls with the president?
Nope. I don't believe so. I've been at the Fed this is my 13th year, and I think there can go by long periods of time when the Fed chair doesn't meet with the president, and that's totally fine.
So, Jared, Chair Powell there making the point that is unremarkable. I wonder your thoughts on that. Is that a typical cadence, or should it be for meetings between the president and the Fed chair? And how often do you meet with Joe Biden?
Well, let's start with the latter part, which I know much better. And the answer to that is frequently very much a different scenario, as you'd expect. We just heard from Chair Powell. Frequently talk on the phone, frequently meet together in the Oval Office, and almost invariably to go over reports like the one we just got today. And I haven't had a chance to brief him on this report yet because he's been wound up with NATO, but I will. And when we do, when we sit down to have that briefing, I can tell you that the pattern has been one that's lasted decades now. I worked with, as you said, I worked with the president. We was the vice president. We always have great briefings. He always asks tough, sharp questions. That hasn't changed one bit. Over the years, our conversations tend to be somewhat not unlike what you and I and Kailey have been talking about. He wants to know what's the market reaction, what's this going to be, how's this going to be experienced by consumers, how is this translating as a kitchen table issue, how are folks feeling about this. We even might talk about interest rate paths. That's something he's obviously interested in. And those conversations have been ongoing as recently as, a few days ago. And the president is sharp and as acute as ever.
So the president's watching the stock market after all? Is that what we learned today?
Yeah, the stock market, I think his view is similar to mine. The stock market is not the economy, but it's not the economy. I think that's a Joe Weisenthal quote, by the way. I mean, if I come into the if I go to the president and I say, great day on the S&P 500, another record, he's going to say, calm down. Tell me what this means for working families. To what extent, every piece of good news or bad news is filtered through to the extent that it impacts, again, families like the one he grew up in. It's a tangible, feel it in your bones, and it's the same, again, the same persistence that I've always seen with this president, mapping these economic reports on into how people experience them. That's key for him.
Well, and Jared, we do appreciate you sharing the pattern you have seen consistently from President Biden, even beyond his years as president, over decades, as you say. I think the question on the minds, though, of us journalists, of American voters everywhere, is whether that can sustain for another 4 years plus. Are you confident that that sharpness can continue through a second term?
I am. I mean, I've seen it continue, as you've mentioned, through decades of work with this president. Even when he was in between vice president and president, he and I kept up on these issues. And we've always had, as I said, a deep and I think quite penetrating conversations that always made the connection. It's funny. It's the one I started with in our conversation where you guys totally understandably are like, what's this going to be for the Fed, the markets, the White House? Our focus has always been on working families, on middle-class families. The president has consistently stressed to me that we need to make sure we have the connective tissue in place, the policy agenda that connects overall growth to the well-being of working families. I've always thought a concise definition of Bidenomics is if you're helping to bake the pie, you ought to get a fair slice. And I think that characterizes a lot of our conversations.